Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope you guys are having a great Friday and a great week too. Now, if you are long the dollar right now, you're probably going, "Oh man, I was going to end my week on a sour note." I mean, the dollar is pulling back, and we're seeing the euro rally a little bit here, but I want to talk about, how far we can go. And I think this is an important chart that you got to look at, because obviously we held the 117 level. So let's go into this really quick. We don't have to spend a whole lot of time on analysis today because it's Friday the 13th. You guys do have to understand that markets are strong. VIX DSI is very low. There's a risk of a pop and drop this morning. What I mean by that is, we rally right into the open and then you see a little bit of a sell-off, or maybe even a grind lower, throughout the course of the day. That's the way I'd probably see it. So let's look at the euro dollar and let's figure out where resistance is here. So let's go from high to low. And then you got 38% retracement. It comes in at 117.84, which this trend line here, let me take it over to a daily chart, zoom in real quick. Okay. You can see this daily chart. It's we could actually be right there too. I don't want to drop it completely because they'll start buzzing because I have my alarm on. So you can see here, right? That should offer resistance today. So that is 117.85. Let's just call it. Okay. 117.85. And believe it or not, I'm still bearish. We have to get a daily close above the 117.50. And there's a lot of time left in today. There is, right? Okay. Support 117, obviously. Cable. So the hold on one second, guys. Here's the sterling. Sorry, I had to respond to a message. So we're finding support at the 138 level, obviously, and I think we wrote that down yesterday. 138. Okay. So resistance is going to be, now this is a descending trend line. We could write resistance now at 138.90. Okay. 138.90. And if you guys are cable bears and you're like, oh, Blake, this thing's going to fail, no doubt, then sell it up here if you can get it, up in the 70s. But support right now is 137.90. Okay. Aussie. Obviously bear flag. You guys know that. But where's resistance today? So if you take this high, spike high, that should take us right back to 73.75 roughly. Okay. And this could be developing a triangle. So we'll do this. And we're going to note this is being support 73.30. Resistance being 73.75, and then obviously 74.20, which is critical, and that has to hold to be bearish, right? Kiwi. Support is 69.90. Resistance is this triangle is basically all we're doing. I'm gonna mark up this resistance here, and this is support. Even though, you know, the triangle resistance comes in a little lower than that, we have to clear this completely to. This is our chart of the day yesterday, right? So 70, 60, 69. I'm writing down 69.90, 69.90, 70, 60 range. That was the chart of the day yesterday too. So just remember that. Dollar Canadian. I mean, look at this. How nasty is this? I mean, this is gross. Look at this 4-hour chart. That's the last 2 days, right? I mean, that 32, a 40 pip range in 2 days. That's gross. It's gross trying to trade that. You know, it's just like that's brutal, right? Okay. So we're gonna just mark up the and you can probably do this as well. I'm not gonna mark this. I'm just gonna leave us in a bigger range, but that's probably what's happening right now. 126, 124.25, right? 124.25, 126, and we're in a range. Dollar Swiss. You know what? I am looking for a little bit of a dip here. If we can just get a dip down to 91.80, which we might be able to this morning. We might be able to get a dip down there. So let's see, you know, maybe a little further. Well, first of all, this is resistance 92.40, right? Oops, 92.40. And a dip down to here would be 91.70, because that's this 91.70. I think that's where we play. That's our sandbox today. I don't think we should get below that. And I don't think we're going to get above this resistance. So US dollar, Norwegian krona. Okay, we're coming off a little bit. Now, I'm long some US dollar Norwegian krona. And this is the 618 retracement. I would not be surprised if we come down and test the 78% today. That's 870. Let's just call it 877. That's ahead of the 870 level, right? So 870. That's big support, but 877. I'm just going to mark it like that so I don't take up a lot of room, but I think that could be tested today. Obviously, resistance at this stage is, well, I'm going to write down 895. I don't think we're getting there today, but I'm writing it down anyway. You never know. Dollar Mexican peso, big support, 1980. Resistance, 1920 or 2025. Stelios, are you here?
Yes, sir, I am.
Hey, I'm gonna have to wrap this up here in the next few minutes, and then I'm gonna leave it to you. I'm going to leave it to you here in just a minute. So just letting you know, I got to deal with dogs. So 110. And then this is 110.60. Nothing's changing. Oops, shoot. That's over here. 110.60. the 38% retracement is why I'm writing this down. This is 110. Oops. So it's 110.60, and then we also mark up, because that was the previous high here, 110.80, just in case we get up there, but we're not. I doubt. Dollar index. We are at the 38% retracement, comes in at 92.65. So let's imagine that's probably going to hold today. 92.65. Obviously 93.20 is major resistance. And we have to really break above that to turn bullish at this stage. So I'm going to keep us in range right now. Gold, let's see. Gold continuing to squeeze higher. Let's see if we can make it up to the 618, which would be, and this is also, well, that's not a trend line. That is what I was marking up as AB equals CD. Wait a second. Hold on. Did I delete something from earlier? Let me just grab this high to low. No, that's pretty much the same. Okay, so 1772, but I'm gonna have to keep us back in range now. 1770. Well, I'm gonna give it all the way up to 75. Support will be 1740, that spike low from yesterday. And I'm gonna put us back in a range. Now that should mean that silver should try for a move back up towards 24, but you can see silver is actually underperforming here. So 24 remains resistance. And this is bearish still, because we're nowhere near that breakdown point. So support is at right now 23. Bitcoin still bullish. Where'd it go? Oh, there it is. Look, we're almost back up to trend highs, but 48.3, right? And we are bullish while we're above 42,500, as you guys know. S&P is easy. 43.75. As long as we remain above that, we remain bullish. Yesterday, we wrote down 44.60, remember? Because that was the top of the wedge. So we are right now just at the top of the wedge. You can see it right here. Remember, so yesterday we wrote 42.60. I think we went as high as 42 or 44.65. So you can give it all the way up to 44.70 today because it's an ascending trend line. Then up to 44.95. So guys, I'm going to pass it over to you. I'm going to pass it over to Stelios. Sorry, I'm going to let him
pass
take
it to
over.
Everybody else. Yeah.
I'm going to pass it to you guys. Have fun with that. I just want to say happy weekend. I'll see you guys in the chat rooms for those of you that are in there. Thank you always for your support. Stelios, it is yours. And I'm sorry, I've got to step out.
No problem. Let me just, I'm going to take the screen in 10 seconds. I'm just uploading the thingy. Okay. So let me take the screen. I mean, not a lot of things I have to say, which are different to what I've been saying for a while, but we are 2 weeks away from Jackson Hole, and the market's preparing for that that event now. And I said on Face, I think we're going to grind. We're going to chop into that the end of August. But there are two things that can happen. One is that Jay Powell is going to be as hawkish as the market expects, maybe even more. I think if that's the case and the market realizes that the taper is coming, probably later this year, and that it is decided, then I think the market's going to like the dollar. Rates are going to go up, yields, I mean, and stocks are probably going to find some difficulty continuing this this really strong move that they're having. So this is my view on the dollar, and I think the dollar is going to be the main driver. Yields and the dollar are going to be the main driver of what's going to happen in the next big move, basically. So the next 2 weeks, I think we can pretty much forget. It is summer markets as well, but this is what I had drawn in the Dixie. Okay, I have to move these a little bit, but you get the idea. I think, oops, or whatever. I think there is a good chance we might see some dollar strength if Jay Powell is hawkish, or is at least as hawkish as the market expects. And this is something that, it's difficult. The market has been quite bearish the dollar, so I still think the risk is for the dollar to spike a little bit, but in the medium term, I think the dollar is going lower. I don't have much doubt about that. Obviously, I could be wrong, but I think that the combination of the deficits and the way the global market actually does need a weak dollar, especially emerging markets. I think there's going to be downward pressure on it. Now, if we do spike to 94, 95, that's going to take a lot of the shorts out, and that's going to definitely cause yields to spike and equities to drop. But the question is, how much do they drop? So that's my view on the dollar, but we're going to have to wait for a couple of weeks for that. Now, metals are the ones that are moving today, so might as well have a look at those. I still think we have one leg lower. And why do I think that? Look at these lows here. We've talked about them so many times, 1680-ish. It was amazing how in this flash crash, we basically stopped almost at that level. So these lows, that there are stops building below. Probably 1670s, 1665, there's going to be a lot of stops there. So the market, when this happens, it does like to test these and to inflict pain, as much pain as it can. So I am, I've been saying this like a broken clock. I am very bullish gold and silver, but I'm not buying them yet. I want to see this broken. The same in silver. We might not get that, of course, but as I said on FA.C.E, I'm going to be buying gold and silver either on a breakdown or on a break higher. I don't care which way, but obviously it would be nice to get lower. But I think if we do break below 1680 and we get all the stops, it's very easy to get to this 50% retracement, which comes in at what, 1620 easily. So if that happens, if that breaks, that's where I'm going to be looking to buy. Similar, so and this could happen with Jackson Hole in 2 weeks' time. If Powell is hawkish, the market's gonna really not like metals. I mean, the market doesn't like metals anyway. Recently, they've been underperforming pretty much everything else, but that they're gonna be onto them. And look at this as well here in silver. There's this ascending trend line. We went almost to the pip, which was amazing. So here we are. We have big support zone here, 2220-ish. So I think we're going to test that. And if we do test and break below, then, you got to be looking at similar levels as gold. So this is the 50%, which is around 2020. I'm going to be looking to buy, but I'm going to be very patient, and I'm not going to be trigger happy, because this thing, especially silver, can really, really move. So 2020 is the level, 20 something, probably 2050 or something like that, 20 and a half. That's where I'm going to be putting my orders in, because these things might get triggered and just fly afterwards. So and usually they happen at the Asian trading, which I'm not awake. So that's what I'm going to be doing. Equities, well, they're a monster. We know that. I mean, there's no point in putting any zones or anything. It's just going higher and higher without, it's even greater than 45 degrees. Same with the DAX, everything. It's just bullish. And as long as yields are not moving a lot higher, then I think there's nothing to stop equities from grinding higher. It's the path of least resistance. We've been saying this, and me and Steve, we've been saying for a while that we think valuations are high, and we're getting to .com style valuations, and it doesn't make sense. But it is what it is. So, do you stand in front of it? Of course, I don't. So we talk about yields, and I am watching yields, especially the 10-year US, which is, if you look at the bigger picture, we're still going sideways. Obviously, we had the big drop in COVID. We went down to, what was it, 50 basis points or lower. But now we are here, and we are knocking our head towards this resistance. So it used to be support zone, now it's resistance. So I'm not, I look at these charts and I'm not convinced. I'm not convinced at all that anything has changed yet. No, we're still here. Obviously, if you're day trading these, there's opportunities. But for me, who, I look at triggers. I want to look at potential triggers from, significant market moves. I don't play for 10 or 20 or 30 or 50 pips. We are nowhere. And I'm waiting for, 10-year US above 150. I'm going to start paying attention. If we get to anywhere near 2%, this is 200-day moving average. I think it is. If that's going to be close to 2%. And Steve, don't open your PC. You're not needed. Go get your holidays. That's what I'm looking at. And don't get me wrong. I want to get short treasuries. I want to get short every bond I can, but I need to get the right timing. Bund is a lot closer for me to get short. I've shown this quite a few times. The last time I got short was 178 or something like that. I didn't get the top, but it was close, 177.5 or something like that. And I got out at 169.5, 169.6, if I recall. So that was really nice. And I'm looking for the same move again. So anywhere within 178 handle, I'm patiently waiting for, and I will short that. What else to look at? Cryptos, well, they are absolute monsters. And we talked about the false breakdown here in Bitcoin below 30,000. Everybody got a bit excited about it. I did too. I wasn't long or short, but I thought that with that breakdown, we were going lower. But look, it was a false breakdown, and we've gone over 50% higher. That is a massive move. And for those who caught it, well done. We're kind of consolidating here, but that's, to me, that just looks like a bullish flag here. So it's, or some kind of bullish consolidation. So I don't think we're going to be stopping anytime soon. Having said that, if we do get risk off from Jackson Hole in 2 weeks' time, then I think cryptos are going to be affected as well. The pound is the same. We broke out a while ago. Where's the weekly in the cable? We had been talking about this for a long time when this broke out. Remember, this was late December. I said I think we should be long the pound. I was short euro pound. I wasn't long cable, but it was a similar move. It hit this resistance zone. I mean, it's trading very technically, and it's consolidating. I think it has one more push towards 142, 141, 142. Same with euro pound. I think we are. I drew this weeks ago. I think we're going to see 83s again. I'm a broken record. I know. I apologize for that, but that's what I want to see. I want to see 83.5 or something like that, and I'm going to be getting long there. And that's all I have. I mean, the rest, I am still looking at commodity currencies to get long. Norway, so short dollar Norway, short euro Norway. I'm not convinced that we're done yet. I want to see Jackson Hole. I want to see what happens if the dollar rallies. If we get risk off, and if the dollar rallies, then we're going to get towards 10 in dollar Norway, and that's actually 10 is what I want to see. So near 10, I'm going to be shorting. A similar story with euro Norway. I want to short both again towards 11 in 11 and a bit euro Norway, 10 in dollar Norway. Let's see. Okay, Steve, don't join. We're done here anyway. So that's it from me. I don't have anything else to say, and I just want to wish everybody a happy and relaxing weekend. And we will see you soon. Thank you very much, everybody. Steve, you just joined, man. You don't need to go on your holidays. Okay, I see you. Don't log in. Bye.
Hey, what did I miss? Okay, so we still have 33 people from what I say. Some of you already logged out, clearly. Okay, just made it. Can you hear me okay? Thank you, guys. Can you hear me okay? Everything okay? I'll be more than happy to answer some of your questions. Just give me a second to put everything in order. Okay, let me open the question box and everything else. Perfect. Perfect. Great. Okay, so you let me know if you know, my internet lags a little bit or whatever, because I haven't even had the time to run any tests. I'm just running on my 4G router because I didn't have time to check the hotel's Wi-Fi yet. Okay. Perfect. So let me see the questions. We had a question about CAD Swiss. What caused the USD CAD to weaken today? That's another question. Let me switch to it. Yeah. USD CAD really range bound for the time being, I would say. Not really weak. We had a question about CAD Swiss. I'll be more than happy to look at it. Okay, so let's start with the USD CAD since somebody mentioned it. USD CAD is still trading above this descending wedge. It can be a pennant, right? But there is also an alternative interpretation. We might have, there's a chance we have already started a leg lower, and this might be a temporary stall before we see lower prices. So the jury's still out, having to do with the dollar, as I was saying a few days ago, and nothing has really changed, right? Because the move lower is not convincing, but the rebound higher is not convincing either yet. So I would give more time to use the CAD. Now, somebody asked about CAD Swiss, and I'll be more than happy to have a look at that. I haven't had a look at CAD Swiss in a really long time. Okay, and you can see how long of a time it has been, right? My last charting on this was dated back at the beginning of 2020, when I believed, as you see, that we would probably break lower, as we did in a very, very, very convincing manner. We've had a nice reaction since, and we might need to see more strength. But for the time being, as you see, we're range bound, right? I would favor an eventual break higher from here, though, for at least one more leg to the upside, right? We did create a rather prolonged type of bottoming pattern here. So yeah, that's what I think about this. So bottom line, not much to do as we speak, right? Let me see, natural gas. Let's have a look at both crude and natural gas. So crude, give it a little bit of time. Okay, there it is. So crude still in the middle of this symmetrical triangle. Alternatively, if we break lower from here, we might see a test of this, and instead of a symmetrical triangle having a channel, right? This area is soft resistance, roughly at 70, right? So just keep that in mind. This is soft resistance. Now, natural gas, as you see, everything is a little bit slow, has had a pullback so far. Let's give it a few seconds. There it is. And we're now approaching the 380 area once again, right? As long as we trade above 380, there is no reason to be bearish. If we break through 380, then we should be looking for a deeper corrective move, but still a corrective move, right? I would be looking towards like 335 next. But against 380, there is a very good technical argument to be long, right? Previous resistance, support following the breakout higher. So yeah, it might do the trick once again. Don't don't underestimate the ability for this to break to the to continue the upside once it found support there. Let me see. TSL. Let's have a look at it. There it is. TSL. Still within 3 islands. Still, is this the ticker? If you can confirm it, is this the ticker we want to be looking at? Ah, you meant Tesla. Okay, so Tesla. Here it is. Yeah, I still have the same issues here with Tesla, meaning there is a good argument to be made that we've broken to the upside, but look at the move higher, right? Very unconvincing that this is the beginning of another bullish leg. Very, very unconvincing. So that makes me believe that there is a decent chance that we're still within a larger consolidation that isn't this triangle that was defined by this trend line resistance, right? So we might not be able to decipher yet what kind of information we have, but we're likely still within some kind of a bigger corrective move here because of the nature of the move higher, which isn't impulsive, it is corrective. So against 780, I would have to say that I would find it very, very hard to be long, right? Very, very hard to be long. Against 780, actually, the closer we get to 780, the more I would be interested to perhaps try my luck being short instead of long. Okay. That's what I think about Tesla. GILD. Is this the one? Just confirm if this is the one. There it is. It's breaking out from what you say, right? We had talked about this formation. Yesterday we confirmed the breakout because we did break out and we did close above it. And we're now approaching the first minor target, which is the 127% extension of the triangle at 71.50. The next one is at 73.20, and the next one is at 75.10. Being long against 70 makes absolute sense. And if you want to be like, if you're looking for more aggressive upside targets, you can even have a stop loss at 67.80. You don't want to see a lower low. So if you want to have more aggressive targets, then you have the ability to have a even more relaxed stop loss. There is a what, mate? Sorry, I don't understand. There is a what on the weekly? Let's also Let's also fib this. Okay. Also a fib level here with the 127% extension. It's the 50% fib. Still, I think we'll probably have to move more to the upside. So yeah, this is also an interesting area if we're looking at upside targets, right? This area over there. And then this one. There you go. So yeah, if you want to, I know you said the weekly, but in any case, you know, we zoomed enough at the daily. I think we get a better idea and a better picture of what's happening here, right? So these are potential upside targets. And in the short term, we've broken out. So in the short term, you know, there's really no reason to be bearish, right? I already gave you upside targets as well. What else, guys, girls? Here's your chance. What else? ZM. Let's see what Zoom is doing here. Things are slow. Let's see. Yeah. We have to give it a few seconds for the technical analysis to populate. You know, still though, the move higher is unimpressive. Listen, it resembles quite a lot of Tesla, right? Meaning there is an argument to be made that we've broken higher. You know, I just need to wait for this to bring up my technical analysis. So the internet seems to be slow. I hope at least you can hear me clearly. So we seem to have broken out, but you know, there is the case that we have we've been building, you know, momentum to the upside has really been lackluster. Ah, there it is. We finally got the formation. So we had the potential of that being the formation, that descending triangle with the intermittent trend line resistance being, you know, the one that matters. Now we have the potential of a bigger formation, the one you see here with a solid blue line. So, you know, I would be careful here in Zoom. It doesn't look like, I mean, it made a few attempts to break out, but for the time being, we found almost a double top here. Of course, you know, in order for this to be triggered as a double top, right, we need to see a breakdown from 341.5. So, you know, shorter term, we need a move below 341.5, and that would then open the downside for a move to 280, roughly. Okay. As long as we trade below 340 and 405, let's say, I would have to say, you know, there's nothing to do here, just being neutral. Okay, SMH. SMH, still waiting for the analysis to populate here. I do remember the chart though. We've made a few attempts to decisively break higher, but we've kept failing each one of them. And this seems to be one more case. In general, there is, the market remains very strong, having to do with indices. But if you look at the majority of stocks, there is a clear sign that, momentum isn't there, right? We've had several failed breakouts or attempts of breakouts that haven't manifested yet. This is an example of a failed breakout, for example, and we had to redraw this line multiple times. Initially, it was something like that. Then we got this little false breakout over there. Then we said, okay, let's redraw this line. Now we got this. So basically, it makes it very, very hard to trust this move to the upside, right? You can see why, because this market remains very well bid on one hand, but on the other hand, there is really no underlying strength in the market. In the vast majority of stocks I've been looking at, they seem to still have, this leftover momentum from the big bull run, but it's like we're running out of fuel. So in general, I would find it extremely hard to follow this market higher, a very big corrective move lower, a decent corrective move lower, because we've already run very far, very fast. We've been building formations like ascending wedges, etc. We've had prolonged divergences in RSI. We have sentiment being overly bullish. We have VIX showing some divergences as well. So yeah, this is a very hard market to fade on one hand, but chasing it up here, as I've said before, this is a market that what you can do is respect it and manage your positions and keep your positions if you're already in the money and you have positions that are running. Be careful with them and keep monitoring them, because you might be able to squeeze more out of this market. But if you have no positions and you're looking to be long, yeah, I think this is a very dangerous proposition after 15 months of non-stop moving higher, after the market having priced in, rainbows, unicorns, and everything else. There is a big chance that something will break this cycle, at least temporarily. You know what I mean? We might see a sharp, like 10, 15% corrective move lower before the market is free to move higher again with, some healthy underlying momentum. So yeah, that's what I think. AMD.